We started off with a very interesting Monday where stocks came tumbling down across the markets. Started off with the Asian session, went to the Europe session, and lastly in the New York session. In this session of the Market Watch, we'll be covering what's happening, is there any panic in the market, and what to expect. My name is Samson Mzera, and welcome to this episode of the Market Watch series where we talk about the news, the charts, what's happening, and what to expect when trading. So, two things have been running the market since Friday when we had the unemployment report. The first is uncertainty over the health of the US economy, and the second is the timings of the US interest rate cut. And this has had wide implications on both the stock markets and the strength of the dollar. Stocks fell sharply on Friday after the NFP reading, where we had the number coming in at 114K, and the July one was even revised downwards down to 179K. And the unemployment numbers coming in at 4.3%. We also had the average hourly earnings rising by 0.2%. Now, this entire mix coupled with what we've been seeing, for example, in last month's inflation reading, is starting to spook concerns of a recession. And the market did react to this. The 10-year yields, for example, fell to the lowest level they've been since December as investors began rallying to safe havens such as treasuries. We also had stocks having quite a day with, for example, indices where we had the Nasdaq coming below 1900 and the S&P 500 also coming below the 5300 level. We did also see the Dow Jones coming in below 39500, and the most interesting one, the Nikkei, also coming down to 3500, which again saw its largest drop in years. So we've been seeing headlines like this and this, and the big question is, are we really in a recession? Are we really seeing that the US economy is starting to cool off or to calm down? Or is it even overheating in the first place? There are talks also of a recession and that we are coming to a hard landing. But we need to look at the facts and the state of the US economy. So the big question is, are we in a recession or is this just market hysteria? And market hysteria can be defined as a state where investors and traders panic sell and have irrational behaviors deviating from the fundamentals. Now let's just take a look at the numbers. So for a technical recession, for example, an economy has to contract for 2 consecutive quarters. However, for the US economy, we've seen growth for the past 2 quarters, and the last quarter we had growth of 2.4%. The second situation is on the unemployment rate, and while it did rise to 4.3% on Friday, the technical definition of having full employment is anything between 4 to 5% unemployment rate, and this is again in line with what the US is experiencing. So yes, we might be seeing some signs of cooling off, and this can be seen in the jobs numbers. However, things are largely still in line with healthy economic conditions. While you might have the NFP numbers coming in lower than expected, they are largely still in line with what a healthy economy looks like. So yes, we might be coming down a bit. Of course, we had this huge bull run in 2023 and 2020, the earlier part of 2024, and it's probably because we've had stocks and investors piling into stocks like Nvidia and Google, the Magnificent Seven, and that is what kept the markets running. And we might start seeing, we might be witnessing a correction of that entire trend as investors rotate to the broader market. Because remember, during uncertainty, these Magnificent Seven stocks became the go-to stocks for many traders as the interest rates kept on going higher and higher. So it's possible that this correction in the market is just a rotation out of these stocks, and a little bit of fear has caused us to move even lower. So while it looks like we are in a panic, while it looks like we are in a sell-off mode right now, we are still technically not in a downtrend or in a bearish market in the technical definition of it on the indices. So traders have to be cautious approaching the markets going forward to see what other data is coming out. So for example, we have the inflation reading coming out in the next week, and this will have a guide on where we are expecting the state of the US economy at the moment. In other news, we also had the Bank of Japan meeting earlier this morning, and this has pared off some of those losses we've seen on USD JPY and the Nikkei. So going through the day, we should be expecting some announcements from them, And this should also remove that hysteria or fear that we saw in the market the previous day. So this is what we'll be looking at for today and going forward. So we'll be watching out for more developments in Japan with regards to the BOJ meeting, and also data that's going to come out next week with regards to inflation. So having said that, thank you for tuning in for this session of the Market Watch, and make sure to stay updated with the charts by subscribing. And if you want to trade any of these instruments, the link is in the description. See you in the next one.